reached just over $10,000, and it started to pull back over the successive couple of weeks. And then this whole, we call it a white swan, we say this is an unpredictable event that wasn't in any of the risk models. That's a black swan, but because the pandemic is actually, there's a history of roughly every 100 years there's a pandemic. There is some data, so we call it a white swan. But it caught most of the world by surprise, and the price actually caved down to the 4,000 range instantly, and that's what we call a flight to safety. Everyone reassesses their risk models, so they get out of every single position. There's absolute panic selling. They sell gold, they sell stocks, they sell all of their leverage trades and everything, and they go to the safe haven, which is US dollars, and they park in US dollars, and then they redeploy back into assets that make sense for the new world that's ahead. They change, the risk models have changed, and you recalculate those and you deploy accordingly. And so you'll see this in the 2008 world financial crisis. Gold, for example, was the perfect safe haven for that time, and it did rally for the next 3 or so years. But it also sold off because everyone sells in that flight to safety, and Bitcoin did in the COVID crash also. So I like to say Bitcoin went from 10,000 to 4,000 to 10,000 over that bump as people reassessed their risks and then redeployed. But the unheard of story, and the more interesting one to me, is that this was also the point where we saw vast amounts of Bitcoin being accumulated and pulled off the inventory sitting on exchanges. And, that was the sign of the reaccumulation that I talked about earlier. But this amount of inventory being accumulated this amount of inventory being pulled off the exchanges was 2 times deeper and 2 times longer. It took 10 months to complete than any other, the prior cycle. And what that did was it moved the floor price of Bitcoin higher and higher and higher until it squeezed. And the Bitcoin price was trading sideways at that point, and people said this thing was a failed safe haven, and it's a risk-on asset. You invest in it as a risky asset. It's not a safe haven. And actually, if you look at the on-chain data, it was saying and screaming, this is a safe haven. And lots of long-term buyers are coming in to scoop it up and hold it as the safe haven. But you couldn't see that in price because the price was highly speculative, and we had a lot of buffer between that floor price that these investors were supporting and the random wander of price resistance and supports that traders speculating on. And so there's a lot of movement in that until the price floor comes up and squeezes you out. And you see that in the accumulation phase of the bottom of the bear. And we saw that happen after COVID. And that was the start of this bull run, this phase of the bull run we saw.
And so just to make sure that I'm understanding correctly, basically what you're saying is there's a lot of people who have Bitcoin who don't necessarily have conviction in it, and they were selling on these exchanges just trying to make money on the price swings. But meanwhile, for 10 and a half months, you had these people with conviction about Bitcoin who were buying on the exchanges and moving that money over to their cold wallets or their cold storage. And so you could see that there was this kind of like period where people were turning to it as a safe haven, but because there was like enough of the people who were just kind of trying to trade on the swings and who didn't have conviction about it, like it took a while to deplete that amount of inventory. But when it did, that's why the price rose so quickly. Is that what you're saying?
Yeah, more or less. We have, Bitcoin is a very, very liquid asset. It's traded on futures exchanges to the billions per day. And so it's a great game for speculators to play and very profitable for some. And it moves in a random walk. When COVID happened, as Michael Saylor said, he took a look at the world, and so much money is being printed that essentially everything's being inflated away at 14% per annum. Anything you want to hold, whether it's a car, whether it's a Harvard education, the price is going up by 14% per annum. And he was looking for a way to hedge against, all of his cash being inflated away. And this is the dilemma that many investors have: is where do you move your assets to in a way that you can outperform that inflation? And that's 14% is calculated by MicroStrategy. And so, interestingly, the timing of it was about right. If you wind back the clock from when MicroStrategy accumulated their first deployment into Bitcoin, and you go back 6 months, which is what Michael Saylor was known to have said as the time frame in which a publicly traded company needs to go through its entire board approval, regulatory approval, SEC approval, and actually implement that purchase. It is 6 months. And that 6 months is right at the point of around that COVID crash, and also where we saw that inventory depletion. And so I think it might have been just a number of very high net worth individuals thinking about the markets in that way. And I'm sure that CEOs of publicly traded companies and their board of directors who are researching this are some of the most well-networked people in society. So I don't think that it was just like those guys that bought it. I think that it was that entire network of people that was spreading the word as here's this, new kind of inflation protection candy that that you can come and get. So.
Well, one other thing, speaking of people who are well-networked, I was kind of disturbed because you have this chart that shows what you believe to be an accumulation of Bitcoin by whales in the days leading up to the news that the OCC, the Office of the Control of the Currency, will now permit banks to use public blockchains and dollar stablecoins for settlement. Can you explain why you think that was the catalyst for that?
Well, for starters, it's a huge win for this entire industry, because now the US government the US Treasury has okayed that banks can now use these public ledgers as infrastructure for banking. With the likes of regulated stablecoins like USDC by Circle, that's regulated. There's nothing to stop a bank from using that stablecoin from transmitting US dollars around the world, cross-border or to each other within the country in, 16 seconds is the block time for Ethereum that it runs on. If you've got that kind of infrastructure that banks can use, I think that if you consider that Bitcoin or crypto in itself is, if you've got USDC, it's a hop and a step to get to buy Ethereum, to buy Bitcoin, to buy any of the leading coins. And you've got DeFi networks that take it on Ethereum, and you can swap it into anything. It's literally seconds away from being Bitcoin, compared to, you can imagine all of the stories of, friends or friends of friends who are trying to figure out how to buy this thing, and they're trying to send money to a bank, and they're trying to send it to Coinbase, and working all that out. Like now, it's a lot more fluid when there's a prominence of stablecoins that are being run by banks and supported by banks. So that's a huge win, and we saw a huge price breakout when that was released, and there was a front running of the price.
Oh, right.
Yeah, exactly. It was I think it was 23,000, and then this thing launched, and it launched ridiculously. And I was like, wow, okay. There's no insider trading rules for Bitcoin. Someone's in the know. So anyway, that was quite fun to see.
Yeah, well, a little bit disturbing. I mean, technically it's not insider trading, but it's the same behavior, just with a different asset that rule doesn't apply to.
Yes, that's true. It's true.
Yeah. Well, so speaking of stablecoins, though, you do have some analysis about looking at stablecoin. I can't speak stablecoin inflows to exchanges. So, what can you extrapolate about the Bitcoin price from what you're seeing there?
They're very good indicators for local movements. Generally, a lot of stuff we look on chain, they differ from the timeframes that they can operate from, and the lower timeframe stuff, we just look at capital flows going into and out of exchanges. You want to see fiat going in, and you want to see Bitcoin and Ethereum and all the other coins move out. If Bitcoins are moving out and money is moving in, well, that's a clear buy signal. And obviously, we can't see the banking wires into exchanges, but we can see stable coins being minted and being sent to exchanges to buy. And so that turns out to be a very good indicator, particularly USDC currently. So it's also
more so than something like Tether, you mean?
That's right. Tether used to be quite good with it, but now in this current phase, Circle USDCs are a much better signal, and that tells me the buying is by regulated entities and most likely US based.